TradeTheNBA.com. This is John. This report is for, the 3rd of March. So the breakdown below, we talked about this with the exceedingly low dip of the DOC here below that 21 level. And sure enough, created a little bit of a pop coming back up. Also the cross of midterm buyers and also a switch crossover here of short-term buyers moving above shorts in the steel cyan crossover right there, as well as that falling orange. The only way the short we're going to continue, if we had that orange pop continuing to rise, did not. It's still within the zone, though, of between cyan and red DOC. That usually is continuation. Now, in this case, continuation would just be sideways. So again, I look for that 4,008 to be that resistance point. You're also going to see some right here where it's at the 50%. Which we go ahead and take a look at what the 50% is. Exactly 98.50, which just 2 ticks below it right now. So that's the kind of mode to be looking at. Of course, the NQ much stronger here. You can see that strong move of the magenta over white and everything turning up from that standpoint. The DOC still hasn't made that turnaround and shakeout's still soft, but relatively benign from that standpoint, and it's not that low a dip on the shakeout. What's interesting to me is this extreme histogram down here and still being below the red line. That's not exactly super bullish. We would look for that to move above the green, negative 55 will turn it green. So that would be where I was looking. And you can see here, of course, TLT, the expectation for higher rates and breaking back down below, and we should exceed the previous low that took place last November during the market's little psychotic episode of thinking that things were going to fall apart immediately and the Fed would have to start easing. The Fed is not having any easing plans in their mind at all. And as a result of that, you still have oil relatively high, which leads to the potential of maybe not accelerating price inflation, but just maintained inflation that still will continue to spread throughout all product levels and elements as companies are gone into their reducing size and things will be forced to just increase prices, which is the lateral effect. Should those items not move or that, then you would see a deflationary. But we're not seeing that from what the current economic data is, and that's just a relative indication of the excess that existed within the economy. That doesn't mean on the bottom end of the scale people aren't suffering, because I think that's already being shown, and certainly we'll be watching the number of people moving on to government assistance and things like that, because that will be an early indicator, even if it's a little bit lagging. But again, to me, key ones always are construction and service-related items, and whether or not you see layoffs in key sectors and whether that begins to amplify. Gold, from its standpoint, doing what was expected from slight increase here, still under a little bit of pressure, but it's unavoidable. It has to continue to make that climb. From a euro standpoint, the eurozone is still a disaster, but they're doing their best to hold it up, and euro is in the range of acceptable. If it gets below that 104, it becomes really a problem. Currently, Bitcoin facing a little bit of a drawdown here, breaking below its support line on a strong move up of a little short activity there. And some of that may just be the repositioning and move. Because again, as interest rates rise, it becomes beneficial to actually, from a safety standpoint, moving into treasuries, particularly as they get closer to even with what inflation has been running at. And you don't have to play the catch-up game anymore. ETH mimicking that move from an intraday 50K, turning around to that positive. We had the white MBI leading, but still strong MBI magenta rising above that. Once the orange dipped below mid-range, that created a whole new buy setup, and that's exactly what Power Mo Opus 2T took advantage of and bought in that configuration. Intraday, you can see, is back and forth choppy in this one. Again, the ranges became much more narrow going through most of the day before the bid kind of got caught up and really started to amplify. So if I click too many times, let's get rid of that. Got to grab a line. There we go. Now I can move it over. And so you can see there, as we got to the middle part of the day and the discussion from the Fed elements, we went from previous algos, middle, those became supports, added on, got back above those, they became solid supports, and then hit the top side up at 3092. And then now we've just broken above it, so that's going to be the return factor, that 3992 range. And then in between, all the positive extremes within that were mostly filled, except for in this breakout range that happened right in between the 70 and 57 range. So on significant weakness, I would expect that that's the area that's going to get filled back in. So you can look for that one. But for now, things are looking pretty strong. You can see from these readings that is a pretty significant fade of short setups within this. So a lot of short covering within that, and it just from an option standpoint and things like that, it just clears out a lot of that negative put gamma and stuff, and just reduces it to force covering in that. And we know what that does. It creates a significant acceleration. So that's what we're seeing. As always, though, look for me in the Skype chat. Trade well. We'll talk to you later.